Thanks for coming in, Jeremy. That's on your day off. Well, it wasn't your day off. But let's talk a little bit about what's happening when it comes to oil prices right now. I had a technical analyst in say he was finding it the most difficult out of all the stuff that he covers, the most difficult thing he could actually project on.
Yeah, well, I think it's actually a really interesting time for oil because you're having a combination of cycles. First, we believe it's the bottom of the economic cycle. We think Q2 marks the trough because of a lot of the key regions are likely to bottom this quarter and have a slightly better second half of the year. The other thing for oil, it's a seasonal trough as far as demand, refinery maintenance season, the shoulder period for product demand. So I think in the next couple months, we'll probably see still a bit of two-way trading. But I think actually when we get into May, we should see some tightening of stocks. And as we move into the second half of the year,
is that because of the so-called driving season in the US, which I always imagine everybody just getting in their cars and driving around aimlessly, but it does make a difference, doesn't it?
Yeah, that's absolutely correct. That's why the maintenance season is there for a reason. You're getting away from heating season and driving season. So product, you're having a bit of a shoulder season. You'll move into more of a demand. If we're correct as far as the global economy sees a bit of an uptick in the second half of the year, although I would say that we think that's driven partly by accommodative policies. So you're getting a little bit better economic growth, and then sanctions are expected to kick in the second half of the year. Clearly, the sanctions pressures have already begun.
Iran, yeah.
Yeah, but I think that
how much is that priced in already?
I think a lot of the physical side, there is already some disruption, but I think more of that will continue in the second half of the year. So you're having a combination of both improved demand, we think seasonally and cyclically, as well as further, at least tightness on the supply side, if not further tightness.
Now tell me what the Seaway pipeline is,
sure,
and what happens when it reverses the flow.
Well, I probably won't go into a great deal about what's happening with dislocation with the WTI, but WTI market is oversupplied. There's a lack of capacity to bring that extra supply out to the world market, so you're seeing a dislocation between WTI and Brent. There's been pipeline talk. One of the ones that's likely to be approved, and probably as soon as mid-May, is the Seaway pipeline that normally delivered oil from the Gulf of Mexico to Cushing, where WTI is delivered. That's is oversupplied point right now, so WTI
we're
is
seeing huge stockpiles, aren't we?
Exactly.
Right now, yeah.
In fact, they've been draining the Seaway pipeline into the Cushing, which has added more supply into that, further bearish. But once they reverse that, they should be bringing about 150,000 barrels a day from the oversupplied area to the Gulf of Mexico refineries. That should release some of that discount that you've seen in the WTI market.
And let's just move it along and talk a little bit about agricultural, that sort of thing. Soybeans, I mean, going to the roof. You'd think that that's not really going to be that important, but it is very important in the whole kind of food chain, isn't it?
Well, for soybeans, you really have to look back to last year in Q4. So in the second half of the year, you had macro concerns, which were generally bearish across all risky assets. But in the agriculture space, you had La Nina was becoming another event, but the market was discounting it.
What is La Nina exactly?
Okay, well, this could be a little bit of a long conversation, but
weather conditions,
El Nino, La Nina are the opposite sides of the same kind of Pacific weather situation, and it's really a speed of circulation. La Nina, El Nino is talking about the water, but there also is an atmospheric combination. And the speeding up or slowing down of that either cools or heats the ocean. Okay. And that obviously affects the atmosphere, which obviously affects global agriculture, but affects more the Pacific Rim, and especially the Americas, where for the world's food supply, that's where a lot of the exports come from. So the La Nina events is historically been more
Jeremy, sorry, I may
sure.
digress. So, what happens with, soybeans? I mean, is this all going to affect
sure.
what's happening with the food space, as it were, in these agricultural commodities?
So I'll just briefly, so the market had really discounted the weather last year, and then by December, the market started realizing the weather was going to be really bad for the harvest there. Since then, you've seen a almost straight line rally in soybeans. Corn and wheat have been held down by U.S. planting expectations, but I think there again, the weather is going to be important in summer. So we're still pretty cautious about agriculture. Demand has been very good from the emerging markets where food inflation is high, and weather continues to be a potential risk for supply.
Absolutely, Jeremy. But what is the overall impact then when it comes to inflation? And we don't need this at the moment, do we? You really need to get the growth engines of the global economy going.
So it's interesting. On the one hand, hand, food inflation is actually at the commodity level is not that high. If you look on a year-over-year basis, most of them are negative year-on-year. So the emerging markets are seeing high food inflation, which is pressuring their central banks.
But is that because of the base effect more than anything else?
Well, I would say it's stickiness because you're not seeing that as much in the developed world. It's stickiness within the emerging markets. And I think China, for one, is doing what it can to import more corn, soybean, to help with domestic inflation. What that does for the global benchmark prices is obviously lift them. So you're seeing a bit of an equilibrium between what's really tight domestically because of structural problems in the food distribution channel and global prices.
Jeremy, thank you so much for your time. Jeremy Friesen there from Societe Generale.